Hey everyone, this is Kevin from KLinvestmentstrategies, and what I wanted to show you today was how we look for patterns to take short-term trades. And on this particular trade that we took this week, I want to show you a typical wedge pattern. And after we had our breakdown in this area, then when we came to the bottom, if you look, we have what we call a wedge where it's coming down at an angle here. And what I'm looking for is for this area here to hold as support and to get a bounce off from that area. Now if you notice down in here we have oversold stochastics, and so what I'm doing is I'm setting my alerts for a break of this 26 area, and I got my alert set, and I noticed on that day that we were making higher highs every half an hour. So what I did was, this is on the daily chart with this downward wedge. So what I do then is when I get my alert that we've broken that 26 level, then I would go over to my 15-minute chart, and if you look here on the 26th, we came up to the 20-period moving average and we kind of hung in that area, and then we broke the 20 and the 50. Now that's what I call a 20, 50, 200 squeeze, because once you break that level of resistance, then what you're looking for is for the stock to then move up to this 200 period moving average in this range. And just the move from this area up to the 200 period moving average would have been about a 6% move. So once we broke this on the 15-minute chart, and one of the things I'm always looking for is that 20, 50, 200 squeeze with a lot of room up to the 200 period moving average. I then look at my stochastics on the daily chart here, and that tells me that we had a good stochastics rollover. So then on the 15-minute chart, you notice we went up and we came right back down to the 20 and the 50, and we held there. So what we did was we took our trade here at 26.10, and on that day you can see that we actually broke up through the 200 period moving average. We got up to the 28.50 level. So what I'm doing in that particular case is, as this is moving up, I am trailing my stop so that if it does happen to reverse and come right back down, I'm going to be able to, even if it 26.10 here, got up to 27, had it broken back down below that 20 period moving average, then I would have still had a nice profit, even if it was in the same day. But it did move up to the 28, about 28.60 level, and then on the here again on the 15-minute chart, what I did was I put my stop right below this 20 period moving average. So on the 26th, we got in at around 26. Actually, we got in at 26.04, and then on the 27th we broke down through this 20 period moving average. So I took one half of my position off from the 15-minute chart when it broke that 20 period moving average as support. I took it off at 28.10, which was an 8% gain in just one day on half of my position, and then I held on to the rest to see if this 50 period moving average would hold. And as soon as it broke down below that 50 period moving average on the 28th, then I took the balance off at 27.66, which was a 6.22% gain. So as you can see on this trade, as soon as we broke this 20 and 50, we got our 20 and 50 200 squeeze. You can see on our 15-minute chart where we got in here, went right up to the top of that wedge, and that held, and then we reversed off from that. So that's why we took our profits. So in a 2-day period, we took a total profit of 7.06%. That's how you trade a wedge.